The power of SPDR S&P 500 ETF SPY.
Investment Bible of S&P 500 Index. In this video, we would like to go through SPDR S&P 500 ETF SPY. Please stay until the end.
This video has been structured as below contents. At first, we would like to understand how stock market behaves over the long term. Also, would like to understand what is S&P index means for us, and how we can consistently earn from it.
Detailed contents would be explained. Stock market historical trend. What is S&P 500 index? Eligibility criteria of S&P 500 index inclusion. Different way to invest in S&P 500 index. ETF available to invest in S&P 500 index fund. Why S&P 500 index always goes up. Investing in S&P 500 index via SPDR SPY ETF. Why SPY is very popular. Do you need any expert skill to invest in SPY? SPY net asset. Performance of SPY. SPY expense ratio. Sector allocations of SPY. SPY top 10 holdings. Risk of SPY investment. Best practice of SPY investing. Summary.
Stock market historical trend.
Stock market historical trend. Stock market return is about 9.79% per year since 1900. That means we are giving you the historical trend for last 123 years. This historical data might help you to determine your investment strategy. For last 10 years it is about 10.41%. For last 20 years it is about 7.64%. For last 30 years it is about 7.52%. So, we can clearly see that even there is short-term volatility in the stock market, however in the long run, it is generating significant returns. We know that market always goes up time and time again even through all of the economic disasters and dips. Even though the market generally goes up, people lose money on the stock market. Because people trend to time the market. They sell when they are panicking, and so they sell low, and then people generally buy when the markets are going high. Research suggests that even 95% of financial professionals cannot actually beat the stock market. Therefore, investing in ETF can be a good way to earn long-term profit without any active work.
What is S&P 500 index?
The S&P 500 index is a stock market index that tracks the performance of 500 large-cap companies in the United States. The index was created by Standard & Poor's and is widely regarded as a benchmark for the overall performance of the U.S. stock market. The companies in the index represent a diverse range of industries and sectors, including technology, healthcare, financials, and consumer goods. The S&P 500 index is weighted by market capitalization, which means that companies with higher market values have a larger impact on the index's performance. The index is calculated using a float-adjusted market capitalization methodology, which takes into account the number of shares available for trading in the market. The S&P 500 index is widely used by investors as a benchmark for the performance of their portfolios and as a way to gain exposure to the U.S. stock market. Many mutual funds and exchange-traded funds ETFs track the S&P 500 index, making it easy for investors to invest in a diversified portfolio of large-cap U.S. companies.
Eligibility criteria of S&P 500 index inclusion.
To be eligible for inclusion in the S&P 500 index, a company must meet certain criteria. Market capitalization. The company must have a market capitalization of at least $12.7 billion. Financial viability. The company must be financially viable, with at least 4 consecutive quarters of positive earnings and a positive cumulative earnings over the previous 4 quarters. Liquidity. The company's shares must be sufficiently liquid, with at least 50% of its shares available for trading in the public markets. Listing. The company must be listed on a major U.S. stock exchange, such as the New York Stock Exchange, NYSE, or NASDAQ. Sector classification. The company must be classified in one of the GICS, Global Industry Classification Standard, sectors that are represented in the S&P 500 index. The S&P Dow Jones Indices Committee, which is responsible for selecting companies for inclusion in the index, evaluates companies on these criteria on an ongoing basis. If a company no longer meets the eligibility criteria, it may be removed from the index and replaced with another eligible company.
Different way to invest in S&P 500 index.
There are several ways to invest in the S&P 500 index. Index tracking mutual funds. One way to invest in the S&P 500 index is through an index tracking mutual fund. These funds aim to replicate the performance of the index by investing in the same stocks as the index in the same proportion. They are available through most brokerage firms and can be bought and sold like any other mutual fund. Exchange-traded funds ETFs. Another way to invest in the S&P 500 index is through an ETF that tracks the index. ETFs are similar to mutual funds but trade like stocks on stock exchanges. They typically have lower fees and expenses than mutual funds and can be bought and sold throughout the trading day. Index options. Investors can also invest in the S&P 500 index through index options. Options provide the right to buy or sell the index at a predetermined price and date, allowing investors to hedge their portfolio or speculate on market movements. Index futures. Investors can also invest in the S&P 500 index through index futures contracts. Futures contracts are agreements to buy or sell the index at a predetermined price and date in the future. They are traded on futures exchanges and are typically used for hedging or speculating on market movements.
ETF available to invest in S&P 500 index fund.
There are several ETFs available to invest in the S&P 500 index, including SPDR S&P 500 ETF SPY. This is the largest and most popular S&P 500 ETF, with over $300 billion in assets under management. It seeks to track the performance of the S&P 500 index and has a low expense ratio of 0.09%. iShares Core S&P 500 ETF IVV. This is another popular S&P 500 ETF, with over $280 billion in assets under management. It seeks to track the performance of the S&P 500 index and has a low expense ratio of 0.03%. Vanguard S&P 500 ETF VO. This is a low-cost S&P 500 ETF offered by Vanguard, with an expense ratio of 0.03%. It seeks to track the performance of the S&P 500 index and has over $250 billion in assets under management. Schwab S&P 500 Index Fund SWPPX. This is a low-cost S&P 500 ETF offered by Schwab, with an expense ratio of 0.02%. It seeks to track the performance of the S&P 500 index and has over $20 billion in assets under management. Invesco S&P 500 Equal Weight ETF RSP. This ETF invests in all 500 stocks in the S&P 500 index but with equal weightings, rather than by market capitalization. This can provide a more diversified exposure to the S&P 500 and can help reduce concentration risk in large-cap stocks. ProShares S&P 500 Dividend Aristocrats ETF NOBL. This ETF invests in S&P 500 companies that have increased their dividends for at least 25 consecutive years. It provides exposure to high-quality, dividend-paying stocks and has a current yield of around 2%.
Why S&P 500 index always goes up?
The S&P 500 index, which is a benchmark of 500 large-cap U.S. companies, has historically experienced long-term growth, but it is important to note that there can be short-term fluctuations in the index due to various factors such as economic conditions, company earnings reports, and geopolitical events. There are several reasons why the S&P 500 index has generally experienced long-term growth. Economic growth. The U.S. economy has experienced long-term growth, which has driven the growth of many of the companies in the S&P 500 index. A growing economy can lead to increased consumer spending, corporate profits, and higher stock prices. Innovation and technology. Many of the companies in the S&P 500 index are leaders in innovation and technology. These companies are often at the forefront of new products and services that drive growth and profitability. Corporate profits. Companies in the S&P 500 index are generally profitable and have a history of delivering strong earnings to investors. Higher profits can lead to higher stock prices. Monetary policy. The Federal Reserve's monetary policy can impact the stock market. In general, accommodative monetary policy, such as low interest rates, can lead to higher stock prices. Long-term investing. Many investors hold stocks in the S&P 500 index for the long term, which has historically resulted in positive returns over time.
Investing in S&P 500 index via SPDR SPY ETF.
The SPDR S&P 500 ETF trust ticker symbol SPY is an exchange-traded fund ETF that tracks the performance of the S&P 500 index, which is a benchmark of 500 large-cap U.S. companies. The SPY ETF is one of the most widely traded ETFs and is often used by investors as a way to gain exposure to the overall U.S. stock market. The fund holds all of the stocks in the S&P 500 index and aims to replicate the index's performance by holding the same proportion of each stock as in the index. The SPY ETF is traded on the NYSE Arca exchange and is managed by State Street Global Advisors. Why SPY is very popular? The SPDR S&P 500 ETF Trust SPY is one of the most popular ETFs for several reasons. Broad market exposure. The SPY ETF holds all the stocks in the S&P 500 index, which represents the largest and most widely traded companies in the U.S. This provides investors with exposure to a broad range of industries and sectors, making it a popular choice for investors who want to invest in the U.S. stock market. Low costs. The SPY ETF has a low expense ratio, which means that investors can gain broad market exposure at a relatively low cost. This is particularly attractive to investors who are looking for a low-cost way to invest in the stock market. Liquidity. The SPY ETF is one of the most heavily traded ETFs, with high trading volumes and tight bid-ask spreads. This makes it easy for investors to buy and sell shares quickly and at a fair market price. Accessibility. The SPY ETF is traded on the NYSE Arca exchange, which means that it is accessible to a wide range of investors, including retail investors. Track record. The S&P 500 has a long-term track record of delivering strong returns to investors, which has made it a popular index for investors seeking long-term growth. Easy to invest. Investing in SPY is easy and accessible to anyone with a brokerage account. You can buy and sell shares of the ETF just like you would with a stock, and you can invest as little or as much as you want. Overall, the SPY ETF's broad market exposure, low costs, liquidity, accessibility, and track record have made it a popular investment option for a wide range of investors.
Do you need any expert skill to invest in SPY?
You don't need to be an expert to start investing and building wealth in the stock market. In fact, you need to invest and hold SPY forever. This ETF will help building wealth over long term without a lot of work.
SPY net asset.
As of April 4, 2023, the net assets of the SPY were approximately $374.83 billion. This information is subject to change based on market fluctuations and investment activity.
Performance of SPY.
Over the long term, the performance of SPY has been quite strong. According to historical data, the average annual return for SPY since its inception in January 1993 has been around 9.53%, although there have been periods of volatility and losses as well. It's important to note that past performance is not a guarantee of future results. If you would have invested $10,000 in 5 years ago, your investment would have grown to $16,981 even despite recent volatility. In the same way, if you would have invested $10,000 in 10 years ago, your investment would have grown to $31,706 even despite recent volatility. However, it's important to note that the performance of SPY, like any other investment, can be volatile in the short term. For example, in 2022, SPY experienced a significant decline, but it is now in recovering mode steadily. If you buy SPY at this moment, you are buying it at least 10% discounted price, which might be a good chances.
SPY expense ratio.
SPY has a low expense ratio of 0.09%, which means that you'll pay only $9 for every $10,000 invested annually. This is significantly lower than the average expense ratio for mutual funds and other ETFs, making it an attractive option for cost-conscious investors.
Sector allocations of SPY.
The sector allocation of the SPY is determined by the composition of the S&P 500 index, which is a market cap-weighted index of 500 large-cap U.S. stocks. The sector allocations of SPY are as follows, as of March 31, 2023. Information Technology, 25.81%. Healthcare, 14.65%. Financials, 12.84%. Industrials, 8.38%. Communication Services, 8.31%. Consumer Staples, 7.31%. Energy, 4.75%. Utilities, 2.95%. Materials, 2.61%. Real estate, 2.54%. It's important to note that the sector allocations of SPY can change over time as the composition of the S&P 500 index changes. However, SPY is designed to track the performance of the S&P 500 index as closely as possible, so its sector allocations will generally reflect the current makeup of the index.
SPY Top 10 Holdings.
The SPY seeks to track the performance of the S&P 500 index, which is a market capitalization-weighted index of 500 large-cap U.S. stocks. As a result, the allocations of SPY are determined by the composition of the S&P 500 index. As of February 28, 2023, the top 10 holdings in the S&P 500 index and their respective weightings were as follows: Apple 7.14%, Microsoft 6.33%, Amazon 2.65%, Nvidia 1.94%, Alphabet Class A 1.88%, Alphabet Class C 1.65%, Berkshire Hathaway 1.64%, Tesla 1.45%, Meta 1.35%, United Health 1.4%. It's important to note that these allocations can change over time as the composition of the S&P 500 index changes. However, SPY is designed to track the performance of the S&P 500 index as closely as possible, so its allocations will generally reflect the current makeup of the index.
Risk of SPY investment.
As with any investment, there are risks associated with investing in SPY. Some of the key risks to consider include: market risk. SPY is subject to market risk, which means that its value can fluctuate based on changes in the overall stock market. Factors such as economic conditions, interest rates, and geopolitical events can all impact the value of the stocks held in the S&P 500 index, and therefore the value of SPY. Stock-specific risk. SPY is also subject to stock-specific risk, which means that the performance of individual stocks within the S&P 500 index can impact the overall value of SPY. If one or more stocks within the index experience a significant decline in value, it can drag down the value of SPY as a whole. Tracking error risk. While SPY is designed to track the performance of the S&P 500 index as closely as possible, it is not possible to perfectly replicate the index's performance. As a result, SPY may experience tracking error, which means that its performance may deviate from the index's performance to some degree. Liquidity risk. SPY is an exchange-traded fund, ETF, which means that it is bought and sold on a stock exchange. As with any stock, there is a risk that there may not be enough buyers or sellers at any given time, which can impact the ability to buy or sell SPY shares at a desired price. Foreign exchange risk. SPY invests only in U.S. stocks, but it can be held by investors in other countries. As a result, investors outside of the U.S. face foreign exchange risk, which means that changes in exchange rates can impact the value of their investment in SPY. It's important to carefully consider these risks, as well as your own investment goals and risk tolerance, before investing in SPY or any other investment.
Best practice for SPY investing.
Understand your investment goals. Before investing in SPY, it's important to understand your investment goals and risk tolerance. SPY is designed to provide broad exposure to the U.S. stock market, but it may not be appropriate for all investors. Diversify your portfolio. While SPY provides exposure to 500 large-cap U.S. stocks, it is important to diversify your portfolio further to reduce your overall investment risk. Consider investing in other asset classes, such as bonds or international stocks, to achieve greater diversification. Invest for the long term. SPY is a long-term investment, and it's important to maintain a long-term perspective when investing in it. Short-term fluctuations in the stock market can be unpredictable, but historically the stock market has tended to rise over the long term. Consider dollar cost averaging. Rather than investing a lump sum in SPY, consider dollar cost averaging, which involves investing a fixed amount at regular intervals over time. This can help reduce the impact of short-term market fluctuations on your investment. Monitor your investment. Keep track of your investment in SPY and periodically review your portfolio to ensure that it remains aligned with your investment goals and risk tolerance. Rebalance your portfolio as needed to maintain your desired asset allocation. Invest regularly. The key to building wealth through investing is to make regular contributions over a long period of time. Consider setting up automatic investments into SPY on a weekly, monthly, or quarterly basis. Consider consulting a financial advisor. If you are unsure about how to invest in SPY or other investments, consider consulting a financial advisor. A financial advisor can provide personalized advice based on your individual financial situation and investment goals.
Summary.
It's important to note that no investment is without risk, and investors should always do their own research and consult with a financial advisor before making any investment decisions. The most important thing is to just get your money invested as quickly as possible, no matter what the stock market is doing, because your wealth would be made over the long period of time. It's also a good idea to consult with a financial advisor to determine if this investment is suitable for your particular situation. Feel free to leave any questions or comments down below, and I will do my best to answer every single one of them for you. This is a brand new channel. If you find any values from this video, please subscribe and like. It will motivate us and keep alive.
We hope to serve you the best.